The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the April 25th fantastic Friday edition of today's Opening Bell on The Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the newsletter that is the intelligence for creating your financial freedom. My outcome, as always, is to teach you how to master the tools for trading and investing, and that includes the tools of the mind, because our mind, well, that is the one thing that you and I want to be able to control. So let's go look at one of our tools. This is the tool I call honesty is the best policy. You know, I'm reminded of the story of a tribal chief who decided to test a young man he had chosen to be his successor. The chief asked the successor to prepare 2 meals for him. The first meal was to contain the finest ingredients life had to offer, and the second meal, well, that would contain the worst ingredients. So the chief sat down to the first meal, which was some delicious cow tongue with vegetables. The chief was delighted with the meal and asked the young man why he had chosen these specific ingredients. His reply, listen to this, his reply was, the tongue is one of the finest parts of our being. It can speak wonderful words of truth that can help our people grow and prosper. The right words can give our people courage and, in fact, bolster their integrity. Needless to say, the chief was quite impressed. So a few days pass. The chief sits down for his second meal and found it to be the identical meal as the first. The chief, perplexed, asked the man why he had prepared the same meal twice. The young man answered, well, the tongue can be the best part, but it can also be the worst part. You see, the tongue can speak words of anger, discouragement. The tongue can tear our people down, rob them of hope. It can weave deceit, speak untruths, and cause disharmony. The tongue, more than any other weapon, can destroy our village. The chief knew he had found his next leader. Yes, folks, honesty is the best policy. It is Fantastic Friday, and welcome to the show. Let's get things kicked off here. Right now, we got Dow futures. They're trading off 51 points, trading at 16,379. S&P futures back about 6 points. They're trading at 1867. NASDAQ futures off 19, trading at 35.65. King dollar back 11 cents. It's trading out at 79.76. Goldilocks on the move this morning, trading out at 12.99.60, up $9.10. Silver down 1 penny, unchanged, trading out at 19.67. Light sweet crude back 84 cents right now. It's trading out at 101.10. If we take a quick peek around the globe, we have the DAX in Germany. Where is it? DAX is down, where'd it go? 90 points right now, off 1%. FTSE, on the other hand, only down 0.2%. It's off 13. A little bit of a mixed bag. The Nikkei last night in Asia was up 24 points, 0.2% for the most part. Hang Seng, though, down 1.5%, off 339 points. It closed at 22,223. $1 away from 22222 across the board. The Shanghai, it was closing. It closed out at 2132. It was down 21 points. That was down 1 full percentage point. Our call number is 877-927-6648. Give us a call, folks. Would love to take a look at your question. Now, let's go take a look at Goldilocks out here. Gold had so I got many emails yesterday, and thanks for sending all those cards and letters. I do appreciate it, and do try to respond to everybody within 24 hours. You got to just understand that clients come first, and I'm always sending them stock charts or answering questions, assisting them with a trade or two out there. Nonetheless, let's take a look at gold. One of the questions. So we had questions about yesterday's doji unchanged candle in the Dow. What does that mean? So we'll take a look at that, and how we'll take a look at this. We'll go look at other doji candles out there. Also questions about gold. Maybe there was some lack of clarity with regard to my impression or my thoughts on gold. So we're going to start off. We're going to take a look at the June contract for gold. And what it did yesterday, it formed a key reversal session. Now, let me go ahead. Let me put the relative strength indicator on this chart as well. If you are watching us at TigerTV, thanks so much for doing that. Now, in this case here, you know, in order to really have a real key reversal session, the market should be in extended condition. Now, extended condition can be determined by, well, it could be up at a swing point, so that would work. It could be after the completion of an A to B equals C to the downside. It could be by taking a look at the relative strength indicator being towards the top portion, the 70 percentile level, or maybe down around the 30 percentile level at the lows. In this case here, let's just say we were trading back towards a swing point, which was because that's what it was doing April the 1st out there, April Fool's Day. Now, key reversal session, you need to have a open and a close, not an open and close. You need to have an intraday high above and below the previous candle. We most certainly had that. In fact, the candle prior to that, which was, this is Friday, so that had to be Wednesday's candle. That was a little doji out there. Price had moved above and below it yesterday. You need to get a close in the opposite direction of the way of where price was traveling from. Well, clearly it appears, and still appears to me at this stage here that gold is moving or may want to move lower. Now that key reversal session, boy, it really tells you where the bulls came in to protect the market. Now, here's the deal. So you get a reversal signal yesterday. Today you're actually getting some follow-through. What needs to change in order for me to say, hey, this is a bullish move and that maybe we're done seeing lower highs and lower lows out here? Because really what yesterday's candle session also did as a key reversal, we had a lower low out there. So I've got two lines drawn on my chart out here, two trend lines. We're going to look at trend lines here this morning to help us answer or look for clues to that question out here. And if we take a look at the low off of December 31st out here, we're going to take a look at the black trend line. So we're going to use that low, which was 1186.70. We have a low that came in here from a trend standpoint, January 31st, down around the 1238.80 level. Looks like a good trend line to me. When gold broke through that trend line, which was, by the way, on March the 24th out there, that said, okay, we had a change in trend. You see, Goldilocks also had a key reversal session up here at the high on March 17th. That was certainly an extended condition. You take a look at that relative strength indicator. That was up above the 70 level out there, so there's no question about that key reversal session. That was first message that, hey, maybe the move lower was done with. Then it had follow-through on that very next trading session. But it really wasn't definitive until we actually saw the trend broken. Because really at the trend, if you would have taken a look at the trading session on March 20th, that could have been a place where you would have loaded up. Because price came down, tested that trend line, bounced off of that. Of course, that was not a bullish reversal signal, so all it did was it tested the trend out there. You got a slight bullish signal here on the very next trading session, albeit small, and that you could have loaded up on gold right then and there. But as soon as it broke that trend line, that would have been telling you, hey, probably the move to the upside is going to take a deeper retracement. That's certainly what we have seen out here. So how do you get bullish if you are taking a look at the trend changing here? That's pretty simple. In fact, it's easy right now because all we have to do is take the top of that key reversal session from March 17th, I should say, price point 1392.20. And now you can take the top of the two candles out here, April the 14th as well as April the 15th, April 15th. April 15th high, by the way, was 1328.40 out there. So what we can see here is we've got the key reversal session on the bottom. We've got price. It hasn't hit that level yet. What's that price point? If it hits it today, it's probably like right around 1306, 1307, somewhere right around there. Look, what you want to see is you want to see if you see a close above that area, be above this trend out here, that would say to me, guess what? The change in trend, that key reversal session, that really did signal a bottom out here. Otherwise, if price cannot get above that trend, it says maybe you got to wait for it to either break that trend, or it says gold can most certainly move lower in the markets out here. So that's how you would use the trend. If we take a look at silver out here, hi-ho silver, and hopefully that clarifies. Well, one more thing, because the question was also had to do with taking a look at the miners out here. So to look at the miners, let me just pull up the GDX so look at the GDX right now. Now on this GDX chart out here, the red squiggly line, by the way, that is gold. So I've overlaid the price of gold on here, and this just helps you to understand that the miners are going to move lockstep for the most part, right? For the most part. Remember the GDX, it's a weighted index out there, but for the most part, if you can get gold right, you're going to be able to get the miners right as well. Now, in the case here of the miners, if you come off its swing point high from March the 14th, and then from a trend standpoint, you use that. By the way, that high out there was 2803. You then use as your trend line here, April the 10th, That high was 25.30. You'll see that yesterday was actually a slight, the day before, I should say, April 23rd was a slight close above it. Yesterday was really a close on that trend line here. So it's trying to signal that, hey, it may in fact want to go ahead and try to break this trend. But I would wait for gold to actually break the trend, because the GDX is going to move lockstep. And what I would really do, as opposed to just trading the GTX, go do the homework and go find the stronger mining equities out here, as opposed to just the entire basket. If we take a quick look at silver out here, Hi-Ho silver right now, it's trading down it's trading up 4 pennies, trading out at 19.73. Now, we can't really use the same swing point days, because silver topped out or made a higher high or on a different day than gold did. So I'll just try to get as close to it as I can. In this case here, it's March the 14th. So that high in silver, that's what we're going to use to identify the trend out here. In fact, you can do the same thing off of the low, right? In this case here, I'm using the February 3rd level. If I try to use the December 31st to create a trend line in silver, it just doesn't work out here. But we can see inside of silver, if you use the February 3rd level, and then you use as your next touch point the February 13th level out here, you can see that silver here broke that trend on February 27th. It did what it's really supposed to do to give you confirmation. It goes back up, tries to get back inside that trend. It does it for a couple trading sessions, rejects it, and that was it. Now we've seen silver move lower. Here, if you take a look at the current downtrend, what silver is doing as we speak here right now, it's trying to break through that downtrend today. I would say that in the case of silver, in addition to breaking this little red diagonal line, which is using the high from March 14th out at 21.79, it's using the high from April the 10th at $20.40. You really want to see it get outside of that December 31st candle. That high is 19.85, because as long as you trade inside a swing point, and if you've not tested the low in this case here, that is always, the door is always open to do that. Welcome into the House of Silver, as well as the House of TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 60. Dow futures, I should say, are off 60 points right now. S&P futures down about 7. Had a question from our man Z in the den out here to take a look at Amazon. Amazon out with numbers yesterday. They popped, they dropped. This morning here they are trading a bit lower. They closed at 337 yesterday. Right now they're down at 317.94 was the last trade that fired off. So I think the specific question was taking a look at it on some different time frames out here, maybe the weekly chart. So we'll take a look at the weekly charts. Let's first start off. The first chart I'm going to pop up on my screen if you're following us on Tiger TV. This happens to be the e-signal chart here, which has the TAS signal boxes on them. So take a look at this specific equity. Amazon, it is the weekly chart out here. Folks, if you haven't had a chance to check out the TAS signal box, you know there's a video that John Logan does each and every day for you. I believe it's posted by 8 o'clock. Go check that out, as well as test drive the signal box. He's now added the S&P 100 stocks out there. So in essence, I can put it on any stock for any time frame and give you what the market profiles. The market profiles really are helping you understand where support, where resistance is, and then where an equilibrium spot is. Now, there's a new, this is the weekly chart here. The Amazon formed a new box this week, and it says what's referred to, or John refers to as the unfair low, is priced at 313.26. Now, I don't have this turned on so I can take a look at I can just switch over here. Right now, it's trading out at 318. So the first level from a weekly standpoint that Amazon is going to be testing, that it needs to hold, is 313.26. If it closes today below 313.26, it then has entered territory, according to the market profiles, where you would most certainly not want to be long out here. In fact, it broke through that area of not wanting to be long the week ended here of March 24th out there. So that's what the market profiles are telling us and communicating to us on a weekly chart. If we pull up, here's my Ensign chart out here. I was talking about trend lines. We were taking a look at Goldilocks and silver. Well, we've got a beautiful trend line here because the question is, where does price move to? And I do believe price will go ahead and break through that market profile level, or may break through that market profile level. And if it does do that, where is price likely to travel to? Well, we've got this longer-term trend out here, and that's simply coming off the low back in 2008 for Amazon. If you use the low out there, which was $34.68, you then go ahead and use the low, this little doji candle. We'll cover doji candles here momentarily, or maybe after the bell, after the market opens. You would take a look at the 105.80 level. That's July 23rd, 2010. You can see how well this has actually acted as a trend line, as a buying area. If you look at December 30th, 2011, that trend line held. You can take a look at February of 2012, that trend line held. Now, what's that price level? The price level, of course, depends when you get down there. If we also take a look at, and the 1 to 1.618, A to B equals CD to the downside, 269.32. And I suspect 269.32-ish, somewhere around there. Maybe it's 280, somewhere in that general vicinity is where we ought to, well, I guess you could look at it like this. We've got a nice big high-volume bar out here from February 1st, 2013, and that would be a bit of a magnet, 258 to 284 out there. So that is, in essence, the price range. Now, as you know, when you see a hammer candle, candles are very important because they really help you to identify where the bulls, where the bears are hanging out here. And there was a hammer candle on a weekly chart that had formed. This is the weekend of February 7th. And as you know, when you close below a hammer candle, if you're long, you are wrong. And, of course, that means you got to go take a look at where the next swing point is. And in the case of Amazon, the next swing point, because it broke through that level, the next real swing point takes you back into this August 30th level. And 279 to 291-ish should be. So we've got a number of things lining up in that 279, in that 284-ish range, as well as that trend line. If Amazon breaks that trend, that'll be really big trouble. But I suspect that's where you will find the next support for Amazon, AMZN. Now, hopefully that answers your question. And if not, Z, just type in a new question. We'll go back and take a look at it. Let's go take a look at the Doji candle out there. I always got a number of emails on that saying, what does that candle mean? So we're going to put a new stock chart on my screen. This happens to be Ninja Trader, another charting tool application that I use out here. And although it may be hard to read if you found one on TigerTV because the quality is not as precise as our HD technology inside the Tiger's Den, and you want to check out the Tiger's Den, I've identified out here every doji candle so we can take a look at it. Now, as you know, folks, I believe doji candles have way more meaning at highs than they do at lows. The reason is because fear is a much greater emotion than greed, and when the market's moving down, it can keep moving down. We'll come back. We're going to see how this market's going to pop. We're going to go take a look at yesterday's doji and the many others inside the Dow and any other stock chart that you'd like. 877-927-6648. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're up to the races. We got the Dow trading down 52 points out at 16,449. S&P off 5 at 1873. Composite down 22 points, trading out at 41.26. Leading the charge to the downside is both the composite and the Russell 2000 is trading off 6 points, trading out at 11.38. Apple off $2 and change. Microsoft up 63 cents. A nice day out here in Microsoft land. We'll see if those hold. Google's off a couple of bucks. Leading the charge. The upside, though, this morning is Baidu up $7.50. Clean Harbors CLH is the ticker symbol, up 9% this morning, up $5 and change. Synaptics, SYNA, up 6%, up $3 and change. Decker's Outdoor, haven't seen that for a while. DECK, up 5% this morning. Echo Global Logistics, ECHO, up about 12%, up $2 and change. Gigamon, GIMO, up 11%, up $1.77. To the downside, Amazon leading the charge, trading out right now at $3.09, down $27, about 8% to the downside. Commvault Systems, CVLT, that's off 27%. That is getting the major kibosh out here. That's off $18. Vigil Inc., VGGL, off $9 and change. That's off 56% out here. Of course, I'm not sure what's behind that move, but nonetheless, that's up. It looks like an IPO out here. Vigil, that's Cytokinetics. What the heck is that one? That must be an IPO as well. Bad day for an IPO, if that's the case. No? Looks like they just announced their results. Down 58% out there. Visa off $7. Netflix down 6. Tesla is off about $4. KLA 10-core. Clack is down about $4. Now, the Doji candle. Let's go take a look at the Doji candle. What's a Doji candle? Excellent question. Basically, you need to have an open and close very close to each other. Even though it showed as unchanged in the market yesterday, it really wasn't unchanged. If we take a look at what the actual open was, if you're going to be really technical about it, the open was at 16,503.39. The close was at 16,501.65. That doesn't sound like the exact same numbers to me. How'd they get to 0,000? I guess that's rounding methods out here. But, however, the key was, and I'll give you those numbers again. The open, 16,503.39. The close, 16,501.65. When we began the show, folks, we were talking about key reversal sessions. We were taking a look at it in gold. We looked at it in gold, both at the high and the low out here. Well, guess what the Dow did yesterday? Formed a doji candle, up at resistance, and it was a key reversal session. And it was key reversal session because it did close lower. So even though the reports were that, you had 0, 0, 0, 0, do the detail work yourself. Do the detail work. Don't even rely upon what it is that I say out there. Who knows? I can overlook something. In fact, I did overlook something. I place trades. When I place trades, when my clients and I place trades, I provide them with a bracketed order. I believe you should always use a bracketed, one cancels the other, OCO order. All trading platforms have them. Why? Because when you place a trade, when you prepare for your trade, it's the time you're most objective. You ought to have an exit strategy. That's both from a stop standpoint as well as from a target standpoint. Every now and then, when I'm placing and entering orders, I do dyslexic things, or I'm thinking one thing and doing something else. I don't know if you've ever done that, and I did that a couple of days ago. It was only a 20-cent difference, but it was a big 20-cent difference out there. And in any event, still, no matter what, make sure that you've got your trades bracketed. And so now let's go take a look at dojis. So yesterday was way more important than the mere fact that it was unchanged. And not only was a doji at resistance up at the highs, it was a key reversal trading session out here. What does that mean? It means the market should pull back. We'll see what, in fact, it wants to do. Just because I think that's what it wants to do, that does not mean that that's what it is going to do. And I did start off the session, and I said, honesty is the best policy. As you know, I've been long, or my clients and I have been long, off of that April 14th, April 15th level. We ended up taking our profits yesterday. We took our profits yesterday because the market really forced us to take our profits, came back, hit one of our adjusted stop levels. We were out for like about a 6.9% profit out there. Of course, today we're not long the market. We're short the market out here because of the signals out here. We'll see how long that lasts as well. We'll just let the market do what it is going to do for us. Now, if we take a look at the last time, we saw a doji out here up at the highs. Well, that took place on April the 3rd. What do we see? We saw the leaves falling off the trees because that very next trading session, the market moved lower. So if the market does not rebound today, can't tell you what it's going to do, can't tell you what it's going to do, but if it doesn't rebound today, what we're looking at is maybe something similar to what we saw back here on April the 3rd. Whether it's a retracement, whether it's 0.382, 0.618, 0.786, or all the way move back down to the low here from April the 11th. That I can't tell you, but we'll take a look at volume today. That'll probably give us a pretty decent cue as to what the market wants to do. Let's go take a look at other dojis out here. I'm really more interested in the dojis that occur up at the highs, up at resistance level. So I'm going to move this stock chart here. Then we did have we had a low that took place here on February 5th. And a doji candle down there, but that wasn't really the trading session. It was the candle pattern that actually formed over this 4-day period that was the reversal signal. Nonetheless, let's come back here. What is that? That's called a morning star pattern. Now, most people only know morning star pattern as a result of a 3-candle session. Morning stars, evening star candle formations, they can occur over a period of more than 3 trading sessions out here. If we take a look at the last dojis up at highs out here inside the Dow, November 25th. 2013, November 26, 2013. We had back-to-backs. Now, that says that the high of either the candle that it had dojied, meaning the one to the left, or the high of the actual doji, whichever is the higher of the 2 candles, that becomes your resistance point. If you get a close above that, and there's no leaves that are going to be falling off of trees here. Back in November 26, that held as resistance. The market looks like it made an A to B equals CD to the downside into the lows of December the 12th out there. Likewise here, if you come and you take a look at on the move up, we had this little nice V-shaped formation, which is what we've got inside the markets here right now, by the way. And that's really where the market went from a high back in September 2013 down to a low in October of 2013. And if you take a look at this candle down here, and the key, folks, is from a Japanese candlestick perspective. You may use candlesticks in different ways on your trading systems out here. You'll see a number of candles that look like dojis, maybe smell like dojis, but they're really not. You really need to have basically close to an unchanged session in order to truly qualify. And the meaning from a Japanese candlestick standpoint is very important. It tells you that a market is tired, tells you that a market has maybe lost its oomph, it's lost its conviction behind the move, and that's why the following trading session is so important. In the case of the Dow, hey, we're only 11 minutes into the trading session, so we got 6 hours and 29 minutes left and trading out here. So far be it from us to be able to determine what the market is going to do at this stage, because we have to wait to see how the day plays out here. So make sure if you're utilizing these candles that you use them properly. if you're using them the way that at least Stevie Son here is discussing them with you. We can take a look at weekly charts as well out here. We'll stay in the Dow. We can take a look at weekly charts, try to identify doji candles. Here's one as the Dow back in March of 2013 formed up towards a high. You can see that the leaves did not fall off the tree that very following week, and the markets just continued to motor on up. Here's a weekly chart back in September 2012 that did act as a resistance point. The market went ahead and retraced out here. So now let's go check out where is it the market could potentially retrace to. Let's go take a look at the index itself. I'll pull that up on my screen here. Give me a moment to go find the index. There we go. Here's my little tab for it. And let's go take a look at retracement levels. So we know we've got leaves falling off of the trees out here. Let's go ahead and clean up this chart. You can always add these things back in at any time that we want out here. Now what we're going to do is we're going to take a look at from swing point low, the low that came in on April the 11th, all the way up to the high that was put in here on April 22nd. So the dead cat bounce, the likely first outcome, is going to be a move down to about 16,355. You're at 16,419. So that's what, about another 50, 60, about 70 points or so. Is that the likely move? Might be. This could be just a very quick, brief move to the downside out here. What we'll want to do is we'll want to pay attention to what the net declining issues are inside of the New York Stock Exchange to really give us a feel as to whether or not that could be the extent of a move. What's the number we're going to look for? Well, 823, I believe, is the number. I don't have my newsletter open here, but I believe 823 is the number. If we see net declining issues equal to or greater than 823, guess who has the ball? Yes, the Bears will have taken the ball away. Now, right now we're at 1070, 1,070, 1,071 net decline issue. We got a lot of time left in the trading session, so we'll see what happens here. You know, we've seen a market where the Bears try to give the biggest punch that they can, and the Bulls just simply run in. So one area to be looking at is going to be the net declining issues. If you do see more than 823 out there, well, then, folks, then I would have to say that now you'd be looking at more likely a move down to the 0.618 retracement level inside the Dow. That would be 16,225 out here. So that you're at 16,420 right now. That is quite a move down. I don't know, quite a move down, but it most certainly is quite a much larger move to the downside out here. What else are we going to be paying attention to? Well, you know what else we're going to pay attention. We're going to go take a look at the VIX index because we're going to take a look at the two liquidity gauges out here, right? We're going to look at the VIX, and then we're going to go look at the Euro-Japanese yen. If we take a look at the VIX here right now, what's it done? It's gapped up this morning. It's trading at 14.05. What's the key number? The key number here is going to be 14.51. So another about 50 points high, 50 cents higher out here. So two areas to really be watching today. Number one, we have that doji key reversal candle inside the Dow index. Trust me, folks, it was all over the place yesterday in key areas, just as it was inside of Goldilocks. In the case of gold, we wanted to go ahead and see it break its trend line out there. It's downtrend line, just to confirm any kind of move. So if you're in a long trade in gold, what you want to do is you want to see, and whether it's a mining equity, whatever it might be, you want to see gold get above that trend line. Likewise here, we take a look at the so-called trend line, the liquidity gauge for the VIX, how I like to use it. I like to use that 50-day exponential moving average. So if you see price get to 1451 or close above 1451 today, that will certainly, I would imagine, lead to a net decline in issues of more than 823, and it'll be more than just like a few leaves falling off the tree. It'll probably be a bunch of leaves falling off the tree out there. So, folks, if you haven't test drove, test drive it, use it. You know, this is a money business that we're in out here. And the only thing that we can guarantee is using stops. We can take a trade, and if we use stops and exits, the only thing that we can guarantee is that we're likely to be taken out of the trade when either one of those two get hit out here. This is just simply a game about making money, reading the message of the markets out there, and it is about being able to make your money and run it as a business. That means we're going to have spoilage, like any business, like when you run your own household out there and you cook a meal for you, whether it's yourself, for friends, for family, or what have you. Typically, maybe you get leftovers, okay, which is cool. Nothing wrong with leftovers, but most people, you know it. You know how this works. You box it up. You put it in all that nice Tupperware or whatever it is you might seal. You stick it in the refrigerator, and what do? You throw it out come garbage day. May not be the next garbage day, but eventually you throw it out on garbage day. You got spoilage out there, and you don't really think too much of it. really, it should be the same way when it comes to trading and investing here. You just want to make sure that over the course of time, and the course of time is really a year out there, that you are making money out there, and that's one thing that Mastering Probability does. So go to the homepage at TFNN.com. We've got 2 days left in our Tiger Dollar promotion. That is today and Monday, so you've got the weekend. But, why procrastinate? Just simply go do it. Go do it. Go sign up. You can get my newsletter service. It's like $3 a day. Look, for every $10,000 in trading capital, it's producing $9.50 a day on average in profit since August of 2013 out there. So it'll pay for itself. You just have to stick with it, folks. So we know what we're looking for inside the VIX. We know what we're looking for inside the New York Stock Exchange. Now let's go take a look at our other liquidity gauge out there. That's going to be the Euro-Japanese yen. Now in the Euro-Japanese yen, it has basically been giving us a number. Well, it gave us a little doji signal out here 2 trading sessions ago on April 23rd. We saw a slightly lower close yesterday. We're seeing an additional follow-through. I suspect that what we're going to see here is the Euro-Japanese yen try to move down and bust out the lows, which it has not been able to do. That is the March 6 level. That's right around the 140.38 area. If it can get down there and it holds, then that's the extent of the pullback that we'll see inside the marketplace. If, on the other hand, it breaks through that area, as we talked about yesterday, this is a consolidation pattern. You would expect it to move to at least equal to or greater than the consolidation. That says we would see a deeper correction inside of the market. So that is the whole kit and caboodle with regard to what it is that we should be paying attention to. So that's it. Show's over. See you later. Have a great weekend. No, I'm just kidding you out there. Let's go take a look at some other things as well. Let's take a look at some areas that are popping and dropping inside of the marketplace out there. So let's go back. Let's take a look at Amazon. Let's go take a look at, I think I've got this here in this little core tab out there. Let's put this on a daily chart. I didn't put the daily chart up on my screen earlier, so the daily chart right now, trying to deal with the, now this had a nice sign of strength out here. It's where it's trading back into. This is a level of support that has been tested twice. Today would be the third test out here. Let's go ahead. Let me just clean up this chart altogether, and that way we can take a look at exactly what we are looking at. This was a sign of strength that occurred between October 17th and the very next trading session. I'll go back and see if it was the following day or not. Give me a moment here. Was it the 18th? Yeah, it was the 18th. Gapped up with 5.9 million shares. That's your area of potential support right now. You can see it was tested here on April the 11th. It was tested on April 15th and held. The question is, will it hold today? If not, lower prices in Amazon. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Welcome back, folks. One of the things, and I haven't really talked about it much, if we take a look at what's going on up in the skies out here, if you watch this on TigerTV, I've got I got page 59 of my newsletter. So just to give you my newsletter service, it's about as thorough as you can get. Now, there's an expanded version, and most clients may not use the expanded version out here, but it's contained with all kinds of morsels of information that traders should be aware of and should use. Now, one of those things is really taking a look at some of the celestial happenings out here. Now, on April 21st and 22nd out here, what occurred is what's referred to as the Grand Cross. You can see it was on Monday and Tuesday out here. It was where we had Uranus square Pluto, we had Mars square Jupiter. So you basically had the four corners that were occurring within, I think it was like about a quarter of 1 degree, which is pretty unusual. I believe that in history, we hadn't seen something like that before. The question was, what does that mean? What was it, was there going to be some type of big event that actually took place or not? And so far we haven't really seen, a big event. But if you put that in perspective, April 21st, 22nd, I come back and we take a look at the chart out here. What we can say about April 21st and 22nd, if we go back and we take a look at the Dow, give me a moment to do that here. Let me go back to the daily indexes. We'll come back and take a look at that. I believe that is the high out here. So that's going to be really interesting, April 22nd. So here's the Dow. Now, not the all-time high, but a high out here, right? So you had the market moving up into what is potentially, from a planetary standpoint, what is potentially now, did I use that as a timing tool? No. Is it something that I'm aware of? I'm always trying to be aware of different celestial occurrences that in the past seem to have effects on the market. But do I use that exclusively as a trading strategy? No. But what I do know is that, and Larry was the one that really turned me onto it enough to go ahead and digitize the entire ephemeris so that I could go ahead and apply it to stock charts and so forth. And so what he was the one that turned me onto, I think it was, who was it, J.P. Morgan or somebody. Who was it that maybe somebody that Den will know? If Larry was in there, he could tell us the story for sure. But it was that millionaires don't use astrologists, but billionaires do. I believe that was it. So in any event out here, there's other tools. The best tool that I've used is called Apogee and Perigee. And I trade those. I trade futures. I love trading futures, and I use those as benchmarks out there. So thanks to Terry Nadeni, he does think it was JP. So if we take a look at it, so what we do know here also about the market is that the high, if we just take a look at the Dow, if we take a look at the Dow out here, it did form a high on April the 22nd. So only time will tell whether or not, and we'll get a pretty decent feel as to the depth of this pullback. Again, what we want to be paying attention to, though, today, you want to be paying, in my opinion, you want to pay attention to the VIX index. If it crosses the 50-day, you want to pay attention to the net declining issues inside of the NYSE, and you certainly want to be paying attention to volume on this pullback here. If we go check out some of the volume here right now, we take a look at the ETF structures. Let's go take a look at, speaking of the Dow, which has been the leader on the way up. Let's go see what kind of volume is already occurred here in the first 27 minutes of trading. So far, we see volume of about 900,000 shares. Yesterday, it moved higher with about 4 million shares. So what it's coming into this little sign of strength, and it was a sign of strength. There was a gap up between April 15th and April 16th. You had about 5 million shares, really 8 million shares on that trading session of April 15th. So key level here to be watching inside of the Dow Diamonds is going to be the low from April 16th, 162.93. Folks, it has always been, yes, as always, it's been great to be with you all week. Have a great weekend, fantastic weekend. It is Fantastic Friday. I look forward to seeing you bright and early Monday morning. Keep your seatbelts on. Tom O'Brien, Daryl Martin are up next for the Nadex Bull Bear Binary Option Hour. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.